Are you prepared for the shifting tides of the financial market?
Indeed. With experts like Chris Vermeulen and David Lin breaking down the latest in economic trends, you are in good hands.
Our AI summarizes their extensive research into quick, digestible insights so you can make informed decisions without the hassle.
Pause for a moment as Chris starts by delving into the looming financial crisis that could turn markets upside down.
And stick around. David Lin shares strategies for navigating these uncertain times, ensuring you are prepared. Today, we are analyzing President Trump's announcement regarding a 25% tariff on foreign cars, which has significant implications for the auto industry.
The host voices concern over how these tariffs could escalate car prices and ultimately affect American consumers.
The host clarifies that the tariff will only apply to foreign-made cars, forecasting inevitable price increases.
This pricing change may push consumers towards American-made vehicles like those from Ford and General Motors.
The host anticipates that tariffs will dramatically increase prices on foreign cars, pressuring manufacturers.
This may lead buyers to shift their focus towards more affordable American-made vehicles. The host emphasizes the irony that consumers will be forced to spend more on vehicles, while wages are likely stagnant.
The analysis suggests that while the aim is to bolster American manufacturing, it may inadvertently hurt consumers.
The host notes that auto stocks have dropped in response to the tariff announcement.
This reaction indicates skepticism regarding the tariffs, producing a genuine boost in the auto industry.
The host concludes that without careful monitoring of these tariffs, consumers might suffer from elevated costs.
He reiterates that true wealth should be measured by access to goods and services, not just financial income.
Today, we are exploring an analysis by Steve Van Meter on the recent reported income statistics for February 2025 and their implications for the consumer economy.
Steve emphasizes the stark discrepancies between reported incomes and consumer spending, noting that corporate warnings reflect troubling trends.
Steve highlights a sharp rise in reported incomes, suggesting this may predominantly be due to government transfers rather than real wage growth.
In contrast, Steve notes that real income growth adjusted for inflation remains nearly flat, indicating underlying economic pressures on consumers.
What does Steve indicate about the influence of government transfers on these income statistics?
Steve posits that absent these transfers, actual income growth has been minuscule, leading to increased financial strain among consumers.
How are consumers responding to economic pressures, according to Steve?
Steve mentions that due to stagnant incomes and escalating costs, consumers are significantly retrenching their spending.
What insights does Steve share from corporate experiences?
Steve cites warnings from Lululemon concerning reduced consumer engagement, illustrating broader economic struggles.
What future predictions does Steve outline if current trends continue?
Steve warns that an increase in inventory among retailers might force them to cut prices dramatically, leading to potential recession if consumer retrenchment deepens.
Steve concludes that businesses must effectively manage inventory while remaining wary of consumer spending patterns.
He advises consumers to prioritize savings in response to the prevailing economic challenges.
Today, we are discussing the financial landscape with Christopher Mullen, who shares his expert analysis on the risks facing equity markets with David Lin.
Mullen emphasizes that the bear market trend is significantly impactful on the Magnificent Seven stocks, suggesting this volatility could lead to a financial crisis soon.
Christopher Mullen indicates that we are potentially on the verge of a financial crisis, anticipating a downturn in major stock indices.
His insights reveal that the S&P 500 is nearing bear market territory with expected losses over 10%.
What is Mullen's assessment of the performance of the Magnificent Seven stocks?
Mullen points out that a bearish price trend in these stocks can result in considerable market declines.
Which economic indicators did Mullen mention as influential on investor confidence?
Mullen references the Atlanta Fed's GDP Now tracker, foreseeing a contraction that might amplify market anxieties.
What specific market downturns does Mullen predict?
Mullen forecasts a possible 15% drop in the S&P 500 and a projected 22% decline in the NASDAQ within the near future.
What strategies does Mullen suggest for investors navigating this volatile situation?
He recommends that investors critically evaluate their positions and consider trimming their holdings to prepare for ongoing uncertainty.
Welcome to another session where we dive into economic insights with Mitch Wechsler.
Mitch highlights the rising volatility in the stock market and discusses the implications of high inflation.
Mitch points out that the stock market is facing considerable declines due to inflation worries.
He mentions a significant increase in the volatility index reflecting major investor concerns.
Mitch emphasizes how rising interest rates directly impact housing affordability.
He encourages consumers to explore different mortgage types and lenders.
Mitch explains that keeping up with property taxes is crucial for homeowners.
He shares tactics for effectively appealing tax valuations to ease financial burdens.
Mitch advocates for collective action among homeowners to address rising taxes.
He believes grassroots movements are essential for enacting change in policies.
Mitch predicts that the market could see a downturn of 30 to 40% based on current economic trends.
He advises prospective buyers to be cautious and hold out for favorable market conditions.
Mitch underscores the importance of being proactive about investments and understanding local market dynamics.
He highlights the value of financial education and community support in navigating economic challenges.
Today, we're exploring market insights from the technical traders who focus on the challenges facing investors, especially in the NASDAQ and small-cap sectors.
The analysis highlights significant pressure in the market, underscoring potential risks for traders.
The technical traders suggest that short-term sell signals are rampant, indicating a bearish environment.
They express concern this could lead to substantial market pullbacks, particularly as the NASDAQ and small caps are under pressure.
What does the technical traders say about potential market pullbacks?
They warn of a potential pullback of 20%, particularly if current bearish trends continue. The technical traders highlight that large tech stocks, notably within the NASDAQ, are under pressure, which traditionally impacts the broader market.
What advice do the technical traders offer regarding trading strategies?
They advise against bottom picking in the current volatile environment, emphasizing the risks involved.
What is the market outlook suggested by the technical traders?
They predict further downward pressure and recommend that traders brace for ongoing volatility in the upcoming period.
How should traders adapt based on the technical traders' insights?
They should remain informed of market trends and resist impulsive decision-making amid volatility. Monitoring large tech movements can provide crucial insight into market direction.
Today, we're exploring market predictions with Steve Hanke, a prominent economist at Johns Hopkins University, known for his accurate forecasts.
Steve's analysis reveals potential for a significant market correction due to changes in the money supply and economic conditions.
Steve Hanke foresees significant risks in the market, suggesting a correction of 15 to 30% later this year.
He highlights the role of regime uncertainty and contraction in the money supply as critical factors.
According to Steve Hanke, a contraction in the money supply signals upcoming economic stagnation.
He emphasizes that such contractions have historically resulted in recessions.
Steve expects inflation figures to stabilize around 2% this year.
However, he warns that monetary policy effects often have delayed impacts on inflation rates.
What does Hanke predict for this year's market?
He forecasts a markdown of 15 to 30% in equity markets, warning of persistent volatility.
Steve advocates for proactive planning amidst anticipated economic difficulties.
He suggests that investors keep close tabs on monetary policies and market indicators.
Wow, that was quite a lineup of insights from our financial experts.
Indeed, each guest brought their own unique perspective on the current economic landscape.
Right? It's clear that inflation and market volatility are major concerns for everyone.
Absolutely. But I found it fascinating how Steve Hanke and the technical traders both warned of a potential market correction, though with different magnitudes.
Exactly. Hanke's prediction of a 15 to 30% correction really underscores the urgency of this topic.
And then we have Mitch Wechsler stressing how crucial it is for consumers to navigate these turbulent waters effectively.
Plus, Chris Vermeulen highlighted the trends, indicating we could be facing a financial crisis soon. That's a bit alarming.
For sure, And let's not forget the rebel capitalist host pointing out how tariffs could potentially complicate the pricing landscape even further.
Wow, if this video opened your eyes to the complexities of our economic future, don't forget to like and subscribe.
Your support is vital for us to continue delivering these valuable analyses from top experts.
Stay tuned for more engaging discussions as we dive into the intricacies of global economics.
You won't want to miss the upcoming video where we'll explore even more critical financial trends.